Okay, so exactly on this chart, we can clearly see that we are in an uptrend. As you can clearly see that price has taken out this inducement, confirming this one here is a swing point. And as you can clearly see, price reversed and made a break past that high. So this means that this here becomes the swing point low. And of course, this here is a bullish break of structure. And this means that we are in a new trading range, ranging from this low all the way to that high. We can clearly see that this retracement came all the way taking out this major inducement because it occurred after the break of structure. And after taking out the major inducement and mitigating this decisional order block exactly right there, you can clearly see price is reversing back. And let's see if this one here is a break. Okay, so exactly right here, if I am to take my trend line, of course, start from that swing point and move all the way to that, we can clearly see that exactly right here, this bearish candle, as you can clearly see, it made a break past this external high, and you can clearly see that the break was by a wick. And this is what you guys are actually asking, if is that break a valid break of structure, or can we use that as a valid bullish break of structure? Of course, yes, that is a valid break of structure. And if that's the case, then this means that our trading range low is no longer this one, but now this one here. Okay, so this here is the rule. I mean, a break of an external high or low by a wick or shadow is considered a valid break of structure unless that external high or low represents a major inducement. Okay, so actually the logic behind this is simple. It's that, okay, so let's get to the logic exactly right here. I made some notes so that you guys can actually follow through. Exactly right here, this is the logic that when price only breaks or only wicks through an external high or low, it indicates that the momentum was insufficient to produce a displacement. So this means that, or as a result, price must retrace to gather additional liquidity to fuel that continuation, all the way breaking past that external high by, of course, a candle body close or by a displacement. Okay, so exactly right here, we can clearly see that's a valid break of structure, and this one here is our new trading range low. Okay, so exactly right here into our new trading range that ranges from this low all the way to that high. We need to mark the liquidity, or we need to mark our core liquidity levels in that trading range. And I can only see this minor inducement exactly right there. And I can also see this. Okay, so I can also see this external low, of which now this one is a major inducement. I know this is the external low, but at the same time is the major inducement. This one here is a valid break of structure. So exactly right there, that's a valid break of structure. I know it's by a wick, but it's considered to be a valid break of structure. Okay, so this one is the extreme order flow. And yeah, so our trading range is fully marked. And yeah, let me run price and see what price does. Okay, so you can clearly see exactly right there, price reversed, took out the minor inducement and mitigated the extreme order flow, and you can clearly see price is reversing back, and you can clearly see the displacement now. That huge move all towards this external high exactly right there, and that's now a break of structure exactly right there with no negotiation. And so this another question, will this remain to be the external low, or now we'll be shifting this external low to this area? Of course, price has made a break of structure, so this here is no longer our external low, but now our new external low is that one there. So this means that if you have been using this one here as, if you have been using a break by a wick as not a valid break, then this means that you will still be using this low, of which it is of the previous trading range, as still the low of your current dealing range. And with that, you will be doing some wrong market structure. Of course, this one here is our new trading range. And of course, this one here is the low of that trading range. So this means that's a valid break of structure. That's the trading range. And yeah, so if I am to continue running price, you can clearly see exactly right there. Price is heading higher and higher, created this inducement exactly right there. So that's our inducement. So exactly right there, that's our inducement. And if I continue running price, you can clearly see that price is okay. Price has taken out the major inducement and is now getting back into our dealing range. If I am to mark the POIs, we can clearly see that all of this will be the order flow, and we have our decisional, actually the extreme order block exactly right there. So that makes the extreme bullish OB. This one is the extreme order flow, and of course this one here is our extreme the external high. In this case, this is a major inducement, so this means that a break past this low by a week is a valid change of character. So if price now reverses back and break past this low, this swing point low, even by a week, that will be a valid change of character because the dealing range involves or has a major inducement. Okay, so exactly right here, if I am to continue running price, okay, let me make it fast. And yeah, you can clearly see exactly right there. Price has been consolidating in between the dealing range, but eventually you can clearly see price is okay. Yeah, exactly right here. Price has mitigated the extreme OB, and you can clearly see it's now reversing towards that external high. So this is just a normal trading range. We all know of this. So yeah, you can clearly see price is still maintaining, it's still in our range, and you can clearly see exactly right there. Price made that break of structure exactly right there. So that's what we call the break of structure. And our new trading range, of course, our new trading range low, it will be this one here. So that's our new trading range low. And if I am to mark the inducements, of course, I can clearly see the inducement exactly right there. So that creates our major inducement. No, minor inducement, sorry. The reason as to why I'm marking this one is because we can clearly see that this one here is not a valid pullback. Okay, so what does that mean? This means that this one here will be the minor inducement, and this external low will be the major inducement. So this means that a break past this external low by a week will not be a change of character, but rather will be a major inducement sweep, even though it's a break by a week. Okay, so that's a major inducement sweep, so get to know that. And if I am to mark the POIs, I can clearly see the extreme order flow exactly right there. And yeah, I don't see any other POI valid, not unless I mark that extreme that is inside this valid order flow. This one here is our major inducement, so let me extend it there. And yeah, so let me continue running price. Exactly right there, we can clearly see price has taken out the minor inducement, and this one here, of course, is our trading range high. This is the external low, and the external low in this case is the major inducement. So a break past this external low by a week will not be considered as a change of character, but rather a major inducement sweep. So that's actually the glitch in between here. And by the way, guys, before we continue, let me introduce you to something here. So exactly right here, you can clearly see Mastering True SMC, and you can clearly see the author. It's Luap, of course, your boy here. Yes, I have a True SMC guide, and you have access to everything. The table of contents there, introduction to Forex trading. You will get to learn about the basics of Forex trading. Yeah, fundamental analysis, even though we don't use it. Get to, yeah, of course, the technical analysis, different charts, and you can clearly see even the real chart examples, true smart money concepts, and that's where now the real journey begins. Get to learn more candlestick, what is a candlestick, valid pullback identification. You get to mark valid pullbacks, get to know how to mark valid pullbacks in a bearish scenario as well as in a bullish scenario. And yeah, of course, the true SMC market structure mapping, you get the theory part, you get the diagrams, and of course, valid the structure mapping, real chart examples, get to inducement, we get to can clearly see order blocks, order flows. You get to learn the criteria of identifying order blocks and order flows. You get to have real chart examples. You have the valid, POI identification, exactly right. It's a long ebook with a lot to learn. Real chart examples, well designed, well edited. You can clearly see engineering liquidity. Each and every question you have about True SMC on the Pro Trend playbook, you will get the answer in this ebook because I spent my time into this thing. And you can clearly see the entry modules. Of course, you can use direct entry or multiple time frame analysis. Of course, that's the first entry module. That is the inducement sweep entry module. You get the decisional PY mitigation. You get the engineering liquidity sweep, the extreme PY mitigation, and of course you can get the time frame route for the multi-time frame analysis, exactly right there, depending with your trading style. Of course, that's the top down. You get the diagram and of course real chart examples here to solidify the knowledge. And of course we finalize with some insights on risk management, discipline, and of course the trader's mindset. I cannot leave you that way because we know that knowing just True SMC alone, you only know how to enter and exit trades, but you don't have the trader's mindset. So I'm just giving you some insights and the way you go through there. And of course the final words: thank you for taking the time to read this guide. Of course, I'll be appreciating you reading my work. And believe me, if you will make it to the end of this ebook, you will never be the same person as you were on the start of it. Yeah, exactly right there. That's my ebook, guys. I've spent a lot of time in this, and this guide will answer each and every question you have on True SMC. And so if you would love to have a copy of this, then feel free to message me on Telegram. I will leave my username in the description of this video. Okay, so let's get back to our video. And exactly right here, if I am to run price has already taken out the minor inducement. Exactly right here, you can clearly see price has mitigated the extreme order flow and it's giving that reversal. And of course, price made it out to the external high after the mitigation of this, that order flow. Exactly right there, you can clearly see price made a break and it was by displacement, exactly right there. Okay, so now you can clearly see in this case price has yet made it out to the major inducement. But now let's say this here was the case, and instead of actually price, or let's say price mitigated that, but this pin bar this week was long enough, taking out our major inducement exactly right there. If this was the case, you will not use this one here as a change of character, even though we can clearly see that this one here is a break by a week, and we say that a break by a week of an external low or high is considered to be a valid break unless the external low or the external high is a major inducement. You will consider that as a valid break of structure. And you can clearly see in this case that the external low is the major inducement. Price has taken out this low, so this one here is not a change of character but rather a major inducement sweep. But let's say now this trading range involved a major inducement, and this here, exactly right there, that was the major inducement. Let's say this here was a valid pullback and this one here was the major inducement. So this means this here will be the engineering liquidity and this external low will not be the major inducement. So this means if price now makes, and so if price does something like this, that break by a week, in this case, this one here will be considered to be a change of character, a valid change of character, and price has shifted bias to bearish. That is the early sign that price is looking forward to go bearish. So guys, I just want to believe that this was helpful and I've answered your questions of when to consider a break by a week as a valid break of structure. And if you have learned something, of which I believe you did, so do me a favor, drop a like, and of course if you want to grab the ebook, get your copy, of course I leave the link in the description of this video. Feel free to message me, and yeah,